Okay, so I guess trade recaps are back. For a second, I was debating whether or not to start doing trade recaps again, but then I realized I upload reviews almost every single day, and we already go over P&L, execution, inconsistency, consistency, confidence. We already go over everything during those videos, so might as well. I guess it could help keep me more accountable. But I was also kind of debating whether or not I wanted to do it because right now I am taking a lot more losses than I would like. Obviously, I'm filtering out my model, so I was like, well, I'm not sure if I want all those losses to be on the channel, but I realized that's literally the point of the channel, to document the journey. And like I said, I'm already going over it every single day, so it's not like, new. But I also think it'll be cool to gradually see the improvement from having taken a bunch of losses, filtering out my model, and then, seeing the consistency begin to develop based upon winning trades with trade recaps. Anyways, enough of the yap. So right now, not right now, you guys read the title. Today we ended up, it was a losing day. However, it was a great trading day. I want to break down the trading day. I was actually super confident coming into this trading day and week. I still really am, based upon simply the reviews we've done, and I guess kind of the breakthrough we've discovered over the weekend and the week from reviewing. But today I was very confident coming into the trading day. However, based upon the executions, I still would create this an A quality trading day, not an A plus, mainly due to this first entry, and I'll go into that as well. We took 2 trades today. With the second trade, with the second trade having us gotten trolled out. Wait, nah, we got trolled out on the second trade. I don't know how I'm trying to say it. Got trolled out on the second trade idea, looking to go short. However, let's break it. Let's go over everything. I'm gonna first break down the whole trade idea, then I'll show you guys images of the before and afters, even though we see the clear after here, and then my mindset going into it. So, starting off on the higher time frames, we did have these internal highs that we were very close toward. If I showcase the image right here, bang, we were close. That's the second image. Market open, we were very close to taking out these highs. On ES, we had already been SMTing off these highs. However, going into the trading day, this is what I was looking for. I was looking for us to continue a little bit lower, take out internal, and then continue higher. Didn't end up doing that, just continued higher off a market open. SMT'd off of a 5-minute low or whatnot, continued higher. Now, this was my real only draw on liquidity I was looking to see get taken. However, I realized the 15-minute we had these internal highs. Once we traded higher toward these internal highs, took these highs, and then formed a change in state of delivery, that's when I looked to short. However, before getting into that second trade idea, this was the first trade idea I was looking to take. So we had an internal SMT right here, which we continue to hold, by the way. So pretty obvious here and here. This was the first. It was right here. So but the SMT continued to hold, like I just said. So we had these highs. I was looking at SMT off of at least something before really have looked to have wanted to see price action trade toward this high, displace toward this high, whatever, target that high, reverse off that high. You guys get what I'm trying to say. So this was news data release. We had today, we had pending home sales. Trump speaks later, but doesn't affect the market right now, or not to my knowledge. So once we had this huge spike, call this rejection block, whatever you want to call it, I executed. This I classified as a messier change in state of delivery. Once we took out this high, and displaced lower, I wanted to see price action continue lower. Obviously, that's why I executed short. However, during the moment, I felt that this internal liquidity wasn't significant enough in order for us to actually make a move toward it. So I still classified it as low to mid probability, and that's why I managed my risk a lot differently on this trade idea. I'm not sure whether or not I mentioned this. I probably did in a review. However, I realized based upon how I execute, I have a total max loss on the trading day, $300. Split between two trade ideas, 150 and 150. I take two trades a day, right? However, I scale in and I scale in heavy, meaning that allows me to execute upon an initial trade idea with super light risk. For example, this trade idea was $50 worth of risk, one micro. Now, a lot of people will be like, oh my goodness, you're under risking. However, here's the caveat. I found that once price action begins to displace within my desired direction, I scale in additional contracts anyways. So what I can use my is my scaling in opportunity as a means of confirmation on whether or not I personally think this trade idea is valid or invalid to continue to size risk upon. Kind of gives me an insurance policy. Like, hey, if price action immediately reverses, I only lose $50. However, if it displaces in the right direction, I scale in additional contracts, balance out my risk to what it would have regularly been, which in this example, $150, and then allow price action to continue to do its thing, even if I get stopped out the trade. So this trade managed my risk perfectly. Only took around a $60 loss. However, this trade idea right here was a lot more valid. This I would have put mid to higher probability, but not fully high probability, but definitely more so mid probability plus. Holy yap! We took out this high, had to change the state of delivery off of it, failed to change the state of delivery once, and then had that displacement. We executed. Upon seeing this strong displacement candle lower, we scaled in an additional contract, showed our SL above this high right here. Price action came back up, took out this high, chopped for a little bit, continued back to the downside, and then eventually flushed lower, which it's also doing right now. Having hit, looked to target my first initial draw I wanted to see us SMT off of in order to continue higher. Long story short, got trailed out the trade. It happens, but I was also sitting here thinking, okay, we had a premature entry here. This could have been, obviously, over the weekend we recently just discovered what has been causing the leakage within our trading model. That's going to take time to fix. So I still will be taking some premature entries. I still will be taking some low probability entries until we fully, filter that, learn how to properly filter that out. That's a given, right? That's not what I'm concerned about. What I'm slightly concerned about is getting trailed out of trades. Now, out of however many trades I've taken, I've only gotten trailed out of 3 trades. But I don't want getting trailed out of a trade idea to become a common reoccurrence. So recently I've been thinking, okay, how can I continue to refine my scaling in model? Because right now it is based upon how price action continues to displace and new internal highs and lows we form, which is normal. People base it upon, hey, we have an order block here, we continue to validate, let me scale in an additional entry, keep my SL or whatever below the order block, newly formed order block. Cool. However, mine is like a tiny bit different. It's just simply based upon internal highs and lows we end up forming, which 90% of the time holds valid. However, we do have times like this where I do get trailed out of the trade. Now, the question is, was this a significant enough internal high in order to scale above? I think with today's specifically, maybe with this scaling in, I was focusing too much on displacement rather than where my SL would be, what validating location my SL would be, because this isn't something I would classify as a significant swing enough internal high to set my SL above compared to something like this here or here or even here or even here. So before Point having gotten off the chart, I was just brain rotting for a bit, thinking, it's kind of how I reset my mind. I was thinking, okay, well, maybe if I had a heat map or a footprint chart, I'd be able to tell level, where absorption could be, or orders, blah blah blah. and it'll be able to prevent me from having situations like this. But now looking at it now, this wouldn't even, if this is going to be in the review tonight. Okay, I'm going to type this down. In the review tonight, also review scaling in mechanics. What do I mean by this? Highs and lows, you set your SL above or below. Analyze the difference between those and today's trade. You had your SL above, because I want to see whether or not there was genuinely a difference, because if so, then that means today's scaling, SL, when I scaled in an additional contract, simply wasn't valid yet. Or whether or not, hey, if it was valid based upon all my other scaling, entries, then maybe looking to add a footprint chart or a heat map or something that could showcase levels of absorption could be beneficial. But yeah, that's actually a really good review. That's going to be solid. I'm hoping it's the first, mainly because if that is the case, then it'll help me refine my scaling mechanics even more, because now it won't simply be based on just displacement. It'll also be, which already is, based upon significant swing highs or lows, but it'll continue to solidify the fact that, hey, even if we have a nice strong displacement candle right here, that's not yet fully a confluence to scale in a contract, because this high right here isn't yet fully validated in order for us to scale in an additional contract or whatever the case is. That's huge. Yeah, like I said, there's a lot more refining that needs to go into my model. I am close, but there's a couple more steps. There's probably like 4 or 5 more steps I need to take when it comes to, you know, my scaling mechanics. Don't want to get trailed out of those low probability executions. Don't want any premature entries. Don't want any low probability executions. I want to keep it mid probability, high probability only. Now you will have those outliers where you have times where, hey, this was a garbage buns trade. That's fine. Bias and direction. Most of the time I bias and direction down. However, you're not going to, you can actually fully understand where price action is going all the time, but that doesn't mean you'll win every single time trading toward that draw. However, I want to keep those at a minimal. So, yeah, there's a couple things I need to refine before I can truly have those consistent 30K months. But yeah, definitely on the right path toward it. So that was today's trading day. If I show you guys images after, this was the first initial trade idea. I didn't execute upon this, but I was looking to see price action displace lower. Upon having news, this is how it looked. Now it does look messier than usual, but I do have trades that are like that, which are flagged with, I know this isn't a review session, I know, but probability, messier wicking entries. An example, okay, that was literally today, bro. Like this, or like this. Can't really see because that was a whole trade idea. Actually, this had scaled in entries too. We can actually debunk 2 theories in one. Wick high, scaling an additional contract here, I'm sure. Wick high. So I think the scaling in thing I was just talking about is actually valid as well. But anyways, you can see the entry I meant. So yeah. But today, like I said, I rated an A grade trading day, execution day. Unfortunately, we got trolled out. We would have made probably a couple grand. Trade would have probably been a $700 to $800 trade at full TP upon scaling in additional contracts across however many accounts, 4 accounts. That would have been a solid trading day, but didn't happen. That's okay. However, I'm so glad we're continuing to steer in the right direction, actually genuinely having clarity about where to improve within our trading, how to improve, and what to do. Like, there's a clear path now that gives me confidence moving forward rather than, oh, I just need to execute and hope, cross my fingers that it's not a low probability trade. Now I can begin to finally understand what makes a low probability trade, or well, we're beginning to understand. But yeah, that's today's trade recap. Love you guys. Thanks for watching. Review will be out later today, like always. And what am I gonna go do right now? Probably play Clash Royale. I hate that game. You know what? Let's play now. New update is available, bro.